Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from the coast of Connecticut. Welcome to the show, Pat Zingarella.
Thanks, Victor. Excited to be back with you.
Well, great to have you here. Now, Pat, you were last on the show about 18 months ago, and love to get an update. But maybe before we do, perhaps give a little bit of your backstory for the folks who haven't met you yet.
Yeah, sure thing. So Pat Zingarella, I'm the CEO and founder of a company called Invest Clearly. We are a directory of GPs and a review platform where LPs that provide proof that they've invested with the company can write reviews on them. So it's ultimately a single centralized location for investors to put in investment preferences, find a list of GPs that match those investment preferences and their deals. And then they can read reviews from LPs that they know are real experiences because we require proof that they were an investor before they can leave a review. My backstory, I spent most of my career in corporate America when I got bit by the real estate bug and I started listening to podcasts, obviously the bigger pockets ones, and moved it from small multifamily into commercial. And then when I was at Gartner, I got connected with a commercial real estate investor through a mastermind and went to go work for him, moved across the country, went long distance with my fiance. And it turned out when I got there, everything the guy was doing was fraudulent. So very quickly learned like, hey, I got to get out of here quick. And on my way back, I started doing some sales consulting. And one of my clients was in the accredited investor space. They did like lead gen funnels, digital ads, all for GPs looking to raise capital from retail through those meta funnels. And I was working with GPs and I was looking at becoming an LP myself and started looking for lists of sponsors that I should be prospecting from. And also, hey, where can I find a list of people that I should be evaluating? And I couldn't find it. And then I tried, okay, where are all the deals that they're working? And I was like, okay, I couldn't find that. And then I started talking to 10 GPs in the same asset class within a week. And I was really struggling to differentiate between them. So I was like, okay, let me go read some reviews on the performance of these companies. I couldn't find them. And I was like, all right, well, what should I ask them when I start talking to them? And it seemed like every piece of due diligence support was written by the GP. And I was like, okay, there doesn't really seem to be an objective source of information. And Gartner, when I had worked at, what they did is they sat between buyers and sellers of technology where like third-party verification and objectivity was the core of every decision. So I was like, okay, let me kind of mold these three worlds together where, you know, Gartner, the accredited investor lead gen client, and then my experience with the less than exciting real estate investor. And that's how Invest Clearly was built.
At the more institutional end and in the regulated end of the spectrum, you've got the FINRA broker-dealers that often will work with some of these due diligence firms like FactRight, like McLaw, where they're writing actual third-party due diligence reports on the deals, on the sponsors, and the brokers and the RIAs, the registered investment advisors, are relying on that information as part of their due diligence before they even present it to a fund or to a family office. This sounds like it's filling a gap between that and the Wild West.
Yeah, totally. And it's more dedicated to, I would say, the individual investor, the retail. And don't get me wrong, we have some family offices and RIAs and things that are on the platform, and we are fully public. So nothing is gate kept in terms of the reviews. So
Sure.
Anybody can read them. But we originally set out to take this, what I would say, like institutional grade due diligence resources and build that for the average investor. And that's what this is. And so, yeah, I would say it's in between, but also complementary to both of those things. There's a world in the future where we are directly partnering with those types of data providers to kind of bring that holistic view to both opportunity and operator.
So this is more review focused as opposed to, let's say, all of the spectrum of things that would go into one of those more comprehensive due diligence reports.
Exactly. We are the qualitative aspect of that quantitative report, because if you really think about it, there's a lot of those data-driven quantitative reports that are doing deep due diligence on those things, but it doesn't necessarily reflect the experience of the investor, right? Yeah, sure. It's like, hey, this is what happened. This is the result on the exit. What happened in between? You know what I mean? How many times were distributions paused? How many times did communication break down? How many times were K1s late? How many times were capital calls issued? And so what we've decided is like, okay, there is a gap between let me do a full due diligence analysis audit and what did the person experience during all of that? And like, would that person invest again outside of that quantitative outcome? And so that's what we've set out to provide.
Yeah, that makes perfect sense. How do you know that the reviews have integrity? Sometimes because there's a wide spectrum of investors, and some just are going to complain because they like to complain. We see that, for example, in the Wild West of Google reviews. What kind of checks and balances are there in that process?
Totally. I'll answer that in two parts. First thing, what we do is we require proof that every investor is actually an investor before a review can be published. So part of the review workflow is the investor goes in, they choose the sponsor they're reviewing, they write their review, and then they upload some sort of proof that they were a real investor with that company. Most common ones we get are like a screenshot of them logged into their investor portal, a statement, anything that I can look at and say, you would not possess this unless you were a real investor. That's number one. Number two, some of those reviews go up. Right. I'm sorry, just to clarify what I'm saying. What I would say is the investor that just is maybe going out there to complain, call them the emotional investor. If they're a real investor, the review goes up, right? Like it doesn't invalidate them because that they're complaining about something they're unhappy with, right? It's as simple as that. Like if they're a real investor, it goes up. If they're not an investor, it gets rejected. And I've rejected plenty of reviews based on the verification documents, but reviews at their core are subjective, right? Some people could have their returns, or the GP over delivers their returns, but they didn't answer them in an email in an amount of time. And that's their review, that's their experience. And our goal, and as a site, is not to say, hey, this one review reflects the exact experience everyone will have with this GP. It is this person puts value on these things and they have a right to share their experience. Now, GPs can respond to those reviews, right? We encourage them to. And all of this is done at no cost, right? No cost to the investor to write the review, no cost to the GP to actually take administrative access to their profile and respond to them. But both of those scenarios exist on the platform as long as they are a real investor.
100%. Occasionally run into situations where an investor decides that they want to unsubscribe to something and not realizing that it has the side effect that now they're not going to get any emails from us, including any investor updates. And then they wonder why they haven't got any investor updates, and they're complaining in their mind, even though it was something they did and we didn't notice. Months later, it's like, how come I haven't had an update in months?
Yeah.
Right? So we obviously want to know that. So perhaps the review helps, but those are real life situations that occur, and sometimes they reflect negatively on the GP, even though it was something that the investor themselves did.
Yeah. And again, the GP deserves to right size this. And I tell people all the time when they get negative reviews is you've got to respond to them, right? So when we first started creating the platform, we actually heard more from the LP that they wanted the feature of allowing the GPs to respond than the GPs requested it. And so like these investors want the situation contextualized, right? They want to hear about it. And there are an endless amount of academic studies around reviews that state, hey, if you have a less than perfect score, I think the average of like most trusted scores like between 4.5 to 4.8, because it shows like perfection isn't a real thing, right? Like the experience of the perfect experience doesn't exist, but actually being transparent and having like a discourse on it, like an actual professional discourse about it, is valued by the person that's evaluating that company more than just a negative review itself. So it's super, super important for both ends.
Now that you have a little bit of experience with the platform and you've been running this for a while, what is the most requested feature these days?
Yeah. So the most requested feature right now, and let me kind of back up and what we've built and how we've built it. So the most requested feature right now is, I would say, LP networking. Now, we never built this. We were almost like anti-community when we built this, right? Like we're not behind the paywall. We don't gatekeep the reviews. Like anybody can use it. You don't even need to sign up for the site. And we're still that. But more and more, I think as some of the challenges occur, I guess not even just the challenges where people are looking to understand more about the experience, like an LP will write a review and another LP will be like, hey, I want to message this person, right? Like I'm evaluating this GP, or there's been scenarios where people have gotten into really bad situations and want to reach out as like a community to figure out what to do. And so that's been the most requested review, is like LP to LP connection. And we're working on that, and that should be rolling out soon. Now, we don't want to go so far because we are not what I would say an investor community group. Like we want to be a resource in it, and we want to make sure like, yes. And it's hard for us, right? Because I want to build every feature that everybody wants, but it's, we've got to stay true to the platform side of things, but that's what we're working on right now. We should have that rolled out a little further into Q3, but that's what's coming next.
This is a capability that, quite frankly, I think is going to be more important as time progresses. We today It's not talked about very much. It's not making headlines. But if you look at, for example, the current default rates in the CMBS market and the current default rates even with the agencies like Fannie Mae, we are at great financial crisis type levels. We're seeing numbers that are on par with the bottom 2010, 2011, specifically in multifamily. And so there is distress out there that's not necessarily making a ton of headlines that folks do need to know about and understand not just, what's happened, but why. Because even sometimes bad things happen to good people, and we've seen some of those, a few that have made headlines recently. They do involve good people, that things were done the right way and still something happened. And so I think it's important to have that as well. I think the transparency is extremely valuable and something that the industry needs more of.
Yeah, I agree. And I think as we come out of this cycle, right, and we got in at a really interesting time, right? We got in where I think I would have to say like our timing was really good with this. It's kind of like a weird thing to say because it was when things started going bad in the industry. But I think the next cycle is all going to be around differentiation through reputation, right? I think if you look at where we were, I don't know, what is it now, 4 years ago in the, 2021, 2022, it was all about the deal, right? It was all about the deal. And I think, unfortunately, the deal pencils at the time, there wasn't a lot of like operator where, hey, this person's only been in this for a couple of years. They haven't necessarily seen a downturn yet. I think in the next cycle, we're going to see separation from people who really rode that in the beginning and the deal started going bad. I think there's going to be a group of the people where it was like, hey, we are good operators, but this was a bad deal. And then there's going to be a group of people where it was, we saw this coming and sat on the sidelines. And I think that in order to win the trust of the LP, it's going to be a lot less of trust me, a lot more of this is what my investors went through and experienced. I think we're going to be really important, especially as we're going through this next cycle, because it's investors are having a hard time right now, right? And I'll bring up two different things I'm hearing from investors, but the big one is they're comparing every GP to every experience they've had, regardless if that GP had good deals, bad deals. And it's hard, right? It's hard for the GP because there's really not a lot of third-party objective resources that can help them differentiate from maybe some of the other sponsors that are out there that had a tough time. And so the investors are starting with the sponsor now and then moving into the deal. But like, it's not an easy thing for them to do, right? Like everyone's using AI, but AI still is telling you that the fundamentals of the deal and can maybe pull together some unstructured forums from Reddit and things like that. But the other side of things is I'm seeing a lot of LPs come back into the market now. A lot of LPs are starting to recognize the cycle we're in, where people that were emailing me 18 months ago, 2 years ago, that were going scorched earth are now looking for opportunities to reinvest. But again, it's all going to be around like the performance of the GP in all areas, both the quantitative and qualitative aspect of the deal operations to help with the next decision. And so it's a really, really interesting time. I personally think there's a lot more pain coming. I'm not the prediction guy, but just what I know about general cycles in any industry, it seems like we're leading more into what I come from the tech world, what I would call into like, we're in what's called like the trough of disillusionment right before the slope of enlightenment. There's still some more pain to go as we move down into that trough and come out onto the other side is really where the separation happens, where the market, I don't want to say it, but we'll weed people out and we'll create like a clear separation from the people who did and didn't. And then that's the people that come out on the other side. The reputation is going to be king. 100% reputation is going to be king, and it's going to create the separation.
Absolutely. And look, we've not had any projects blow up on us. We've been really diligent. We have paused some projects, and we've done that specifically with the idea of investor safety first, rate of return second. So we don't collect any fees when a project is on pause. Like it doesn't benefit us at all to pause a project. We just feel like it's important to take that lower risk posture. And for a period of time, the investors say, oh, we're moving forward with these other projects. What's wrong with you? And we're starting to see a bit of a flip where now folks are saying, thank you for not doing that. Right? Thank you.
Exactly. Yeah.
And so the retrospective only gets written in the rearview mirror, not in the future. So, but this is also why these reviews and that transparency is so important.
Yeah. No, 100%. 100% agree. And what's nice is about these investors is people, this is a new behavior in this industry of all of this stuff being out in the world that, I mean, part of my role that's hard is like creating that behavior. This isn't like sending back an overcooked cheeseburger, right? It's not what this is. This is a high ticket investment, and these investors are not getting on here and just like throwing up emotional things. Some people are at times, but those scenarios, people are contextualizing it. Like they are experiencing, hey, this is what happened, this is what's going on, this is what I experienced, this is what we expect in the future. It's not like, and I say that in a way where I try to tell people that the types of reviews that we see across the platform are not just someone like screaming in unhappiness, but it's a real contextualized scenario based on what's actually happening. And totally agree. And look, to your perspective too, I mean, to your point too, if situations change, the investor can update the review, right? And like that's a good thing to see too, where, hey, this is what I was experiencing at this point in time. It was painful. Here is my update. It got turned around. I mean, that's great for both parties.
100%. Well, Pat, love what you're doing. If folks want to connect, if they want to learn more, what's the best way?
Yeah, so the website is investclearly.com. My email address is pat@investclearly.com. I'm also pretty active on LinkedIn, Pat Zingarella. You can find me at either of those and you'll get me.
Terrific. Well, Pat, great to get an update. Great to connect as always. And for the listeners at home, definitely connect with Pat Zingarella at investclearly.com. The links will be in the show notes. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.